Joining us now, DeBianchi real estate president and realtor, former $1 Million Listing Miami star, Sam DeBianchi. About 7.25% based on, Sam, it's good to see you, based on the recent Freddie Mac numbers, the highest since 2001. Eventually, because it's buying a home costs so much more, housing prices are going to fall.
Yes and no. I mean, we really have no inventory. And all I can say is I don't want to replay any of the segments that I did or any of the other experts did for what was going to be in 2023, because nobody predicted rates where they are right now. A year ago, they were just over 5%. And we have so many people that are still wanting to buy, but it's really costing that much more. But at the same time, of course, I like to provide solutions and opportunities. So where I'm really seeing a lot of opportunities for home buyers are homes that need some work. Buyers in today's market, they want to have it all. They want to have all the bells and whistles, and naturally, because rates are high, so they want to build in everything into that mortgage rate. But if you can say, look, I'm going to have this house for the long run, I'm going to be in it long term, I'm okay with the floors now, I'm okay with maybe renovating the kitchen later on, those are the homes that you can really go in and you can negotiate those prices. You can get those prices down and know that, fine, you have that higher mortgage rate now, but maybe later on you can refi. The second opportunity are home builders. Home builders right now, they want their homes sold. So they're offering rate buy downs. So again, if rates are at 7%, they'll buy it down to maybe 6%. So you should go in there feeling confident, asking for something like that, asking for other incentives like them paying for your closing costs, them cutting down their prices, them giving you options, the option packages as incentives. So a buyer in today's market needs to go in strong and know that they can, in fact, negotiate, because sellers do want to sell.
So, Sam, that's really good advice. And as Dagan pointed out earlier, rates rise, normally prices fall. That's not happening because people don't want to sell their homes. There's a supply problem in the market, so it's keeping prices elevated. So you have high prices and high mortgage rates. Any idea when this is going to break? How does it break? Because this standoff right now is unaffordable for, to your point, so many Americans.
Well, you have to remember, too, sellers, it seems like they're having the best day ever. But the reality is sellers are being held hostage in their homes. Yeah. Because right now, they've locked in 2%, 3%, 4%. And maybe they want to downsize. Maybe they want to retire. But they can't do that because when they sell, if they have to get a mortgage again, a lot of that profit, a chunk of it, is going to now go into the new mortgage rate. So half of my clients who are sellers, they're actually relocating. Some of them just further north into less expensive places, some of them out of state. Obviously, I'm in South Florida. Prices here are still very, very strong. But they're looking at it from a standpoint of, I'm going to sell my house, and now I can move to a new area where I can go in and buy that home cash, or I can get a less expensive home and get a loan that's far, far less than what I would have to do financing, let's say 80% of the home. So that's now the seller's mindset. Either a seller can't sell or they have to relocate entirely. So it is a real problem for both the buyer and the seller.
Sam,
but there are solutions and there are opportunities. And so I don't want to be Debbie Downer.
You were not Debbie Downer today. You brought solutions to the table, advice for those who are looking to buy a home. We appreciate you joining us, Sam. Thank you so much.
Thanks for having me.
Can I say one thing?
Go.
Rent. Do not let anybody talk you into buying a home. I did the math. 2001. If you adjust for consumer price inflation, if you go back to where mortgage rates were back in 2001, home prices, the median in this country, they need to fall 29%. And that's adjusting for consumer price inflation. So, you know what makes them fall? People start realizing that it's not a bubbly investment anymore. Be very careful.
There you have it right there.
If a smug late night